Hey traders, welcome to another Performante podcast. This is episode 26, and we're going to be covering some more crypto coverage. To start off the podcast, we'll be taking a look at the kind of relationship between BTC and gold and the understanding and the potential outcomes of if BTC will be taking a market share of gold's safe haven status against currency proliferation and inflation. So we'll look at some numbers and see, if BTC is at X price, then what will be like the market share. We'll dive into that, and then we're going to be taking a look at some of the people who say that they're also going to be putting a percentage of their net worth within BTC or in the overall cryptocurrency market, which is pretty significant. We'll be talking about Jim Cramer's perspective on BTC, and then we're gonna finish the podcast with a little bit of institutional talk, and then some scammers who are finally getting caught, which is a very good thing to see. So I'll now pass it over on to Nathan, and thank you everyone for joining us.
Hey everyone, thanks for tuning in. So the first story coming at you is a bit of speculation concerning how much of gold market cap that Bitcoin can take away from it. Pretty famous investor Tim Draper spent some time earlier this week explaining his theory on why Bitcoin could reach 250,000 by the end of next year. A bit of random chance, but it's pretty funny. That's our golden number, the one that we've predicted for the up and coming bull run. Great to see that symmetry. Tim Draper's one of us, perhaps. Who knows? And it's interesting just to see that he's speculating that it can take 50% of the gold market cap, which would be a market cap of 4.5 trillion. And just looking at it top down as an investment, at least in 2020, and even zooming out further, it has outperformed gold. And I think that's really from like the technical price perspective, but as a store of value, I do think Bitcoin still outperforms gold. A, it doesn't weigh as much. B, you don't have to physically store it. It's all data, it's all virtual. It's got a different, like, it doesn't have a cost to produce as tangible with mining, because if you do not get people to go to the mine and mine gold, you're not getting any gold. While setting up Bitcoin miners is kind of a very different logistical stress. And overall, there's just a lot of fundamental differences in terms of why Bitcoin, I would say, is more functional or feasible when compared to the traditional asset gold.
Totally. And I think it's just as a new asset class, it has a lot more volatility as basically a brand new baby and an infant in terms of the historic unexplored theory of how to create peer-to-peer trustless interactions, and there was never anything like blockchain before BTC, so this is absolutely brand new, right? We've never had something like this before, so it's going to be more volatile at the start, and then as it expands and then attracts a lot of capital and gets established within the rest of the asset classes as a valuable store of value and a necessary part of a balanced portfolio, I think it will start to decrease in the volatility. But just looking at some numbers right now to compare the two different asset classes, as well as market caps, the Bitcoin market cap right now is around a little over $350 billion, and then gold's current market cap is roughly 9 trillion. So you can see just how much BTC has to go before it gets to the level that gold currently is at. I'm not going to say it's going to surpass gold just yet, but maybe in the next bull cycle after the one we're going to be currently seeing for 2021. So who knows? That's many years ahead, but the focus is going to be for this upcoming bull run. So to get a little bit more into it, we're going to be going and talking about the next discussion. The Morgan Stanley strategist, I believe his name, let's take a look, might butcher it, Rachir Sharma, said that BTC is rising to replace the US dollar as the world reserve currency. Very bold statement coming from a Morgan Stanley strategist, but he does have some theories here. Let's take a look at them. He proceeded to describe that after decades of mounting, US debt to the rest of the world surpassing 50% of its economic output last year, citing that this is a threshold that often signals a coming crisis, according to the IMF. Pretty bold statements there. Sharma also added that since then, those liabilities have spiked to 67% of output as the government continues to borrow heavily under lockdown. So, kind of the same overall, I would say, argument that we have as to why the US dollar is going to plummet and why there is a need for sound money to be in the portfolio of every single investor as well as the eyes of every single trader. So, a little bit of quotes from him, which I thought was pretty interesting. He said, "Today, most Bitcoins are held as an investment, not used to pay bills, but that is changing. I currently see BTC as a store of value and as an investment, not really as a currency that's transacted in the most efficient way. I think there are other projects that would be better used for that specific means of a currency, but I think BTC is phenomenal for a store of value." But he does say, particularly in countries where dollars can be hard to come by, such as Nigeria, or the local currency is unstable, uh, cryptocurrencies are going to be used more and more. And we did see this in Venezuela. The number of transactions in BTC when Venezuela was in their hyperinflation was much greater than the peak of 2017. So there's more people using it. And they also favor Dash, which is another project, which is pretty interesting. So, yeah, very interesting stuff coming. Got any thoughts there, Nathan?
I feel like Bitcoin is really paving the way in terms of overall adoption. Like we're seeing companies like PayPal, Square, etc., that are adding a lot of PayPal usability, and I think that's really encouraging it being used on a transactional basis. But I think it's going to be much more used as that investment speculation rather than I'm going to use Bitcoin to buy something online. I think people are much more interested in perceiving it as that digital real estate, that asset with a tangible limit that everybody knows. And I think that overall, the Bitcoin's going to get people's foot in the water. But as soon as you go down the rabbit hole and you start investigating alternatives like Ethereum, smart contracts, Oracle projects like Link, and people start to discover that there's a whole ecosystem of different applications, projects, and currencies that really just seek to make basically the consumer experience better. I think that's when the paradigm shift will really happen. But I still think we're a ways away because we're not even at the point of true Bitcoin adoption. I think we're just entering the point where there is a lot of speculation born from the fear that the Federal Reserve is kind of entering that super inflation cycle. And it'd be interesting to know what like Jerome Powell or the rest of the members of the Federal Reserve have to think about crypto. Like, do they print money and are they fearful of Bitcoin because they understand that it's basically a safe haven from their actions? They think it's an interesting idea. That would be one person that I think would have a very interesting perspective on Bitcoin would be Jerome Powell.
Yeah, I'd love to be able to understand what goes on through his brain when discussed about crypto, BTC, source of value, inflation, hyperinflation. Obviously, I don't think he shows his true emotions when he's getting asked by, I guess, like news and the public, really. It'd be really interesting to have like a small
Behind
one-on-one.
closed doors kind of deal.
Yeah, exactly. Would be a very interesting conversation indeed. So to get kind of continue on with the bullishness, continue on with the overall crypto coverage, we do see Twitch director Sean Purdy, I believe that's how you say his name, moves 25% of his net worth in BTC to, in his words, front run the wave of institutional capital. Yet again, another individual who is, I guess, a little bit less known, but he did have a previous company that he was a CEO in, sold that to Amazon, which is pretty crazy. Surety director of Switch. Oh, sorry. Twitch is owned by Amazon. He had other projects that he was CEOs in, but he did not get those unfortunately sold to Amazon. But he still is a pretty significant investor. He invests around $2.5 million a year in startups, so he definitely has the capital to to make a significant impact overall in the crypto realm, I think, in terms of his voice, in terms of the actual capital he's investing, in terms of the ability to reach new individuals in the space. I think it's really great, and he's making some pretty bold statements. And 25% of your entire net worth in BTC is extremely substantial. So, yeah, yet again, we're seeing another person kind of yell from the rooftops, I guess you could say, on Twitter, really letting everyone know that they believe in this project, they believe in the idea, and they understand the reasons why they're looking to hedge against basically the US dollar's demise.
Yeah, I mean, he's joining in on the speculation that's happening across the world. There's even been JP Morgan analysts that have observed funds moving out of gold ETFs and into grayscale Bitcoin's trust. Fidelity believes that 60% of institutional investors think in Bitcoin has a place in their portfolio. And this guy, he made the move, he screamed it from the mountaintops. Kind of not necessarily demanding action from his peers and colleagues, but he's made his stance very clear. And speaking in the note of celebrity investors, let's call it, we got Jim Cramer, who said he bought Bitcoin. He bought some underneath 18,000. He says he bought the dip, super happy with the outcome. What else did he have to say? Kramer said he might invest 1% of his portfolio in Bitcoin. And this was during his podcast on during his guest feature on Pomp's podcast. It was a couple months ago, I believe in September. Another big name joining on board. He's one of the people that when you see him on CNN, I believe, CNBC, every time you see him on CNBC, he's always so passionate yelling about some penny stock or some kind
So
of.
true.
Sometimes what he has to say is pretty illogical, but sometimes you're like, he's passionate. He's doing what he wants.
Yeah, exactly. Yeah, passionate's a good word for him, definitely. His voice can be a little bit piercing, but yeah, entertaining to say the least. So to continue on, we do have our next topic. Definitely something interesting, I think, in the realm of blockchain privacy security. We do see that U.S. Treasury got breached by I guess what they call sophisticated hackers, and it was from a report by Routers. I think that's how you say it. Apparently it was Russians, but obviously it's like according to them, so there's no real, I guess, validated proof. But they were able to breach into the U.S. Treasury Department as well as the National Telecommunications and Information Administration, or NTIA, with the Department of Commerce. So there's some people within the cryptocurrency space just saying Bitcoin means trusting the SHA-256 algorithm more than the U.S. Treasury from Blockfolio. And there have been some other notable individuals kind of poking fun a little bit, Pomp being one of them, just saying Bitcoin never gets hacked. So it's kind of funny how that works. But at the end of the day, I think that they will make the switch inevitably, because if there is a disruptive, new, innovative technology that will genuinely help the corporations, governments, or whatever entity to become a more safe, more effective network, and be able to have it more secure, why would you not make that switch? It just doesn't make sense. You know, you can only be against something for so long before it just makes logical sense, and I think that they will inevitably make that change. And this is just lighting or pouring gasoline onto the fire. If these unknown hackers were maybe even bullish on BTC, this would definitely, I think, pour fuel to the fire for sure.
100%. And so for our next story here is talking about the SCB, or the Siam Commercial Bank. It is Thailand's oldest bank, and they recently dumped Ripple in favor of using the Stellar blockchain to really service their cross-border payments industry. Apparently, I didn't know this, Thailand has the largest demand for remittance payments on the international level, which is super interesting. I guess a lot of tourism and business going on in Thailand. And so just to quote the bank's vice president, We expect that this this new service model will help raise the service experience bar for seamless cross-border transfers for our customers and serve the growing demand for better cross-border remittances. So it's interesting to see that they're kind of swaying more towards the stellar side of things, because I guess fundamentally that's what both projects are trying to solve: have those quick transactions and really facilitate international commerce.
Yeah, definitely. One thing to note, I did see it right here. Both Stellar and Ripple aim to make cross-border payments more efficient, but one thing that is different is I think Ripple is definitely more trying to get into the institutional and I guess firms, the large banks, and then Stellar Lumens is getting more into the individuals who may not be able to even have that available to them right now. Like a lot of people who are living in maybe the United States and Canada can't really fathom a world that you don't have a bank account. You can't transact, right? But there's a lot of people in the world who just don't have that ability to have a bank account. So then um, Jeb McCaleb, who actually created or co-founded Ripple, didn't like where it was going, moving to a institutional fund, large corporation level. So then he created Stellar Lumens, and now he's getting more traction, or at least in this situation, than Ripple. So pretty interesting kind of dilemma that they have. And if you want to learn more, definitely check it out because they could honestly make a movie about it one day. I think they probably will.
Yeah, I feel like there's definitely going to be a movie made, at least in hindsight, at kind of these up and coming crypto companies. It'll be interesting to see which are still around in 10 years because crypto's the Wild West. Very hard to predict what will be the next major headline. Speaking of which, 8 people arrested in Argentina linked to the OneCoin Ponzi scam. This is one that I actually saw on Reddit, which is kind of interesting. I saw it on Reddit like not because of the scam, but I saw it on Reddit when it was being like circulated, advertised, and marketed. Uh, but basically, it seems like the people who run the project got caught, and the people who were promoting the project got caught because they were kind of in on the Ponzi scheme and the profit sharing. So, kind of like one large collaborative venture between some awfully nefarious and dishonest individuals. And it looks like they totaled $4 billion in total, making it one of the largest scams in crypto's history.
Yeah, that's unbelievable. 4 billion is a big number. And to go on with this conversation, we do see another headline here. Crypto founder faces 10 years in prison over millions of dollars in a exit scam and not paying taxes. And this guy is Elmani, I believe. He made millions of dollars through the sale of cryptocurrencies called Oyster Pearl, and he evaded paying taxes to the IRS within that new release. So he said that he had friends and family to receive cryptocurrency proceeds and then transfer them into US dollars and then transfer those US dollars into his own accounts. And that was basically his way of assuming the IRS will never catch him. So, probably not the most intelligent individual when it comes to trying to outsmart the IRS. They will try hard. They will do everything they can. Taxes are something that they care oh so dearly about. So don't be stupid. Pay your taxes, and yeah, especially if you're making millions of dollars, you're gonna get into some really bad situations if you completely ignore them.
Yeah, it looks like he said he only made $15,000 on his uh, tax form that's come to light. But another tax form shows that he spent over $10 million on multiple yachts.
Oh my God.
So clearly, there's a discrepancy between money earned and money spent. And the IRS are probably pretty interested in what he has going on behind the backgrounds with all of his illegal activities. And on that bombshell, I think that's a good place to end this episode. I believe this was episode 26. 26.
Hmm.
Thanks for tuning in. Really appreciate your time. Hope everyone had a great weekend. Take care, everyone.